Welcome to the bear market of 2022, which I feel will be one of the biggest wealth transfers of the decade. The stock market has been going straight up since 2009. A lot of people made money and a lot of people will lose it during this bear market. So I will be your host for this bear market. You will be looking over my shoulder. You'll be watching me manage my money. You will be seeing how I survive and thrive during the bear market. But before I get to that, let me introduce myself. My name is Travis Wilkerson. I am the 2019 US Investing Champion, but I go by Trader Travis online. And as I said, I will be your host. I made a personal commitment to myself once I started coaching way back in 2010. I said, hey, if we ever have a bear market, I want to make sure I walk everybody through the bear market. I don't want to come after the fact and be like, oh, look at how much money we made, or look at all the things you could have done, right? I want to be more transparent up front and show people, hey, this is the proof. I put my money where my mouth is because I've watched a lot of people go out of business in the several decades I've been doing this. A lot of people make money. They're always showing you winning trades, but when the market goes down, they're silent. You don't hear from them. They don't show you their portfolios. They largely disappear, and then they show back up when the market's going up. Be like, "Oh, look how much money I'm making." I'm like, "Yeah, but what did you do during the bear market, right?" So I want to show you it doesn't matter whether the market's going up or down. Over the last 10 years, I've showed people consistently while the market was going up, "Hey, here's how you can make money." But now that the market is going down, I want to show you even more because that is truly what separates the great investors from the mediocre investors. Can you survive and thrive during a bear market, right? And so let me walk you through. I'm going to actually keep a PDF uh, document, and I'm going to put it below this video, as well as links to programs where you can learn strategies you'll see me model during this case study. And the reason I'm going to put everything in a PDF is because I want a journal. I want a proof that, hey, here's how I shepherded everybody through the bear market. Here's all the emails I sent out. As far as mindset lessons, any videos I reference, I will put it in the document and put the document below this video. And the initial plan I have for this bear market blueprint case study is what I'm calling it, is that I want to release a piece of content every week, and I will release the videos to members on my email list first. So they get first crack, first watch at the videos. But life happens. Sometimes people miss emails. Roughly a week later, I will release the same video for free for YouTube. So whether you are part of my email list, you'll get the videos first. But if you miss it for whatever reason, you can catch it when I release that same video to YouTube about a week later. And again, any video I've referenced, I will put in the document below. But what I want to do is go to my screen real quick and just talk about the stock market prediction I made back in February of 2022, well beyond before we hit a bear market, just giving everybody my thoughts like, hey, the market's falling. This could be potentially a bear market. I don't know. No one can predict. If they can, I'd say run the other way. It's impossible to predict. You just can use your experience to kind of like, well, this might happen, but the market doesn't care what we think. We have to trade what we see, right? So anyway, that was a longer video. Again, I'll put that video in a document below. It's actually up on my website, tradertravis.com. And then all these other emails I sent out about living off your portfolio during a bear market. Like a lot of people are thinking like, hey, I'm going to live off my portfolio. And I was showing them, hey, here's the dangers of living off your portfolio during a bear market. And what is the one thing you absolutely should do during a bear market if you're actually trading for a living? So I'll walk people through that. We talked about the put ladder. I mean, during this bear market, I've had someone use a put ladder strategy, and the amount of money they made, they bought a new truck with. And I'm doing a case study in my own account, and I don't like to share my results, but I don't like people to compare my results to theirs because I want to compare it to someone new. So this is a new person just learning strategy. They made enough money to buy a new truck in the middle of a bear market because it is a bearish strategy, but we are able to use it during bull markets as well. So again, all these emails I sent, the last one I put here is people are you annoyed, frustrated, impatient, or excited. Longer email, very vital for you to read to kind of walk you through the mindset you need to have during this bear market. And so I will put that below this video. And now let me stop rambling because I want to drop into the first set of trades I placed in this bear market blueprint case study. We're going to watch me again manage a portfolio in the middle of a bear market. So you take care, and I hope you enjoy. So first of all, it is 12:54 Pacific time, which means I have 6 minutes before the market closes. I always brag about being a 10-minute trader, and I always push it close. But I do want to show you that it doesn't take a lot of time to be an options trader. I spent, I don't know, maybe 4 minutes writing down which trades I want to place based on the parameters taught in the program, and the stock I'm using, SPY, trades 15 minutes after the market closes, so I have some time here to place these trades. But what I want to do is the first one, our profile is based on something I learned from Buffett. Is 2002 shareholder letter here. Most people are familiar with his comments on derivatives or options. They say they're weapons of mass destruction. That was on page 15 of the 2002 shareholder letter, which is kind of funny because on page 14, right before that, he says, sometimes I engage in large-scale derivative transactions in order to facilitate certain investment strategies. So which one is it? Are they weapons of mass destruction, or are they a viable tool for certain investment strategies? So for me, it's a classic case of do as rich people do, not as they say, because in 2008 shareholder letter, you see some of the transactions. This is not the only one. I mean, he's made billions, but this is one in particular where they brought in premiums of $4.9 billion and then money they have invested. So I spent some time studying that, figuring out how we as retail investors could duplicate that. And that's what you'll see here. And again, that is taught as a bonus in the put ladder course. It's also taught in the higher levels of the Options Wealth Academy, which is formerly called the Success Academy. So this is called the Buffett strategy. It's going to be a little bit more aggressive approach than I would usually take because of the fact that I'm implementing this in the middle of a bear market. So I'm going to be a little bit more creative than what I would usually do. And so let me go ahead and set this up. Then I will circle back after I've implemented it to kind of give you a breakdown of what I wound up doing. Because if I try to place a trade as I'm talking, I'm going to ramble on and take too long. So the next one is going to be what I would consider an enhanced covered call strategy, not taught anywhere else that I've seen. And this is taught in the higher levels of the Options Wealth Academy. So I'm going to first start off by buying 100 shares of stock in the middle of a bear market. I'm not buying it because I think it's a cheap level and because I think the market is bottom is going to go back up. No, I'm buying it to show you that you don't have to fear down markets. You can develop skills to learn how to survive and thrive in bear markets. So I'm going to buy it even though I think the market's going to fall. And I want to show you how you don't have to fear that. Okay, I'm waiting for my stock position to be filled, but I don't have to wait for that. I can come ahead and buy insurance. And this is one of the reasons why I don't fear ever buying stocks, whether I'm buying a stock in the middle of a bear market at an all-time high. It absolutely does not matter because I'll always insure my stock purchases. And because I'm doing all these case studies at once, I'm going to actually switch up which insurance policy I usually buy because I don't want to interfere with the Buffett strategy. So I'm going to buy a 400 put, which guarantees I can sell my stock for 400, and I'm buying it at about 374. So let me go ahead and buy this put, and then I will drop back in with the last two case studies I will profile. So I finished for the most part setting up everything. My stock shares, for whatever reason, would not fill. So what I'm going to do is cancel that order and come back tomorrow because it's too late now in the market. It won't let me do the other option strategy that I pair up with these stock shares. So I'm going to close that order because I don't want the stock shares unless I can immediately use that stock shares to bring in income, rent out my stock shares. All right, so I've canceled that order now, and it's a lot going on here, but here's a summary. We're going to start down here first with the cash flow trades. These are what they call bearish cash flow trades. They make money when stocks fall. Will I make money on those? Who knows? Who cares? Don't know, don't care. They're all relatively low risk. And as you can see, I implemented these on a day where the market was up 3%. These only benefit if the market goes down. But the template is satisfied for these particular trades, which I usually don't actually do. I prefer not to use them. But since we're in a bear market, I'm going to make an exception this time following the same cash flow template I usually use that's taught in an Options Wealth Academy. It's just reversed. So the entire template is just reversed. So we shall see how those pan out. Next up is SPY, where there's a lot going on here. I combine several templates and blueprints together. The first one you already saw, which was the Buffett strategy. So I'll throw up a screenshot here just so you can see the history of the transactions I did place. Again, I started with a variation of the Buffett strategy, I teach in the program, where I'm modeling again what you saw in the Buffett's Berkshire Hathaway shareholder letter, that same exact blueprint. So let me show you to you again. We have received premiums of 4.9 billion, money we have invested, right? If it's good enough for a billionaire, shouldn't it be good enough for me? Shouldn't it still work? Do as the rich do, not as they say. Now, I didn't bring in billions of dollars. I don't have the custom-made contracts he does, but I can bring in 6,000. Then I can invest that 6,000, right? And then I bought two trades right here, a call and a put. Do I care if I make money on either one of these? No, it wasn't my money at all, right? The broker will tie up some of my money, but not my money in the market, so I don't care if I lose on any of those trades. So what I'm going to do is do some math real quick. So I brought in 63.20. I immediately spent 4,200 on it, what we call a Buffett call option. And then I also spent $2,020 on another put because our templates are satisfied for puts. And I still have $100 left over. So this is a guaranteed profit, at least $100 is, because I never give this money back per the rules in this strategy. So I never invest my money and I never give any premiums I receive. I never give it back. So I'm good here. It's one of the safest strategies I use, but it's also boring, and it's a 3-year trade, unless I manage it more frequently. Next up, I moved to buying insurance for my stock shares that I did not get. The stock shares wouldn't buy, so I still have the insurance in place, and so I went ahead and used another strategy to offset. If the market goes up tomorrow, I'll lose money on this insurance because I don't have stock to go with it. But I use another strategy to offset that, which I'll talk about here in a second. And then I bought 2 more puts here, the same one for what we call the put ladder course, right? It's traditionally a bearish template. So if the market continues going down, this will benefit, but I found a way to still make money with it when the market's going up. And so the next 3 trades right here are based on the put ladder. Right, and so you can wind up. It's actually a variation of the Buffett strategy, just a little bit different. And so what I'll do is just track the income I bring in, because it's like a cash machine strategy. At least that's what my mentor used to call it, because I'm able to bring in cash flow. So you can see right here, I brought in about $900 in cash. So instant cash shows up in my account, and I can literally rinse and repeat and do this every single week. So it actually wouldn't be 900. So this is based on 3 weeks of trading. So let's say I brought in $300 on average every week, 4 weeks out the month. So I can bring in about $1,200 every month with this particular strategy. Stretch it out over a year, that's $14,000, which was more than the investment I spent to buy the cash machine. That allows me to do this. But the main thing is an income strategy. So what we're going to see is I'm doing this again in the middle of a bear market. So I want to show you how you don't have to fear. Like, there's still tools and strategies you can use in the middle of a bear market to survive and thrive, sometimes make money. Goal is not to make money. The goal is to actually lose less than the S&P. So we're going to actually track the S&P 500 as of today, and we're going to see if I beat the performance of it, right? I'm not saying I'm going to make money. I'm just trying to beat the performance of the S&P. So if the S&P falls 10%, I want my account or the trades to lose less than 10%. If they lose 5%, I still beat the S&P. So it's counterintuitive, but that's how you need to look at bear markets. A lot of people try to make money during a bear market. It's like, no, you just need to survive. Lose less in the market, break even would be best case scenario. If I make money, I'm thankful, I'm grateful, but that's not my goal in the bear market. My goal is not to make money. It's to lose less in the market or either break even for the year. All right, moving on here. I'm rambling on too much. Last one, we already talked about, was the cash flow trades here. And so I sold a series of cash flow trades, and you can see the income brought in. These are also income strategies trades. So 1450 times 3, I bought 3 of them. So $4,000. So they will make a little bit more, but this is over a 3-month time period. So that's about $1,400 per month, which is close to what the put ladder also brings in. And they're both bearish strategies. But this one, if the market keeps going up, I will in fact lose money on these. The put ladder, I won't. It works whether the market's going down or up. It's again, for those who don't know, it's a strategy I used to use to pay for our vacations, gifts for my wife, things like that. It's super, super conservative. It's not a triple your account in a year strategy. It's a don't lose money strategy. So I'm currently using it to pay a big tax bill we have from 2021. All right, so that's it. I will be back with a short edit tomorrow. Hopefully, I can get these stock shares bought and implement one more case study so I can show you that in the middle of a bear market, you don't have to fear. And I'm showing you 4 different ways, 4 different income streams, and 4 different ways to make money during a bear market. Potentially, right? I don't know if I'll make money, but there are strategies you can safely implement in the middle of a bear market to show you that you don't have to fear markets falling. Everybody wants to trade like what is it, SCS or SH. These are inverse ETFs that go up when the market is going down, right? The challenge with this, so yes, I can implement the put ladder, I can implement market cap options, I could do all kinds of strategies on this because it's going up. But people always want to chase stuff that's going up because that's what they're used to, and it's easy. And honestly, it's easy to make money when something's going up. Right? Oh, another one they're chasing right now is oil because oil is going up. But what I challenge people to do is embrace markets going down. Embrace that fear you have. Develop the skill set to learn how to survive in that, because this is what puts people out of business. Bear markets, right? So if you can learn how to survive and thrive in that, then making money when the market goes up, hands down, it'll be child's play for you. And so that's why I'm intentionally not doing these strategies. I could do these strategies on SDS or things like that, but I'm intentionally not. I'm doing these strategies on a stock that's going down to show people you don't have to fear, to implement 4 different income streams, 5 if you consider the dividends I'm going to get for my stock shares once I buy it, but 4 different ways or 4 different income streams off of one stock and while the market is falling. So that is what I'm going to show you in this bear market blueprint case study. You take care, and I will see you in the next update.